Oh, I don't think I can show it on stream, can I? #1 Rick album? What is that? I don't know what #1 Rick is. Ghost new album? Oh, #1 rock album. Bro, I have to buy a new chair. Like, I'm about to freak out, dude. Like, I don't want to spend more money on a fucking chair, but it's like getting to that point. It's called Ghost. Bro, I'm not listening to this shit. Yeah, dude, they're famous for. Bro, I'm not listening to this shit, bro. Their album before this one is called The 7 Inches of Satanic Panic. And they're the ones who wrote Mary on a Cross. Nah, nope, nope. Negative Ghost Rider. Apply for Streaming University? Hey, dude. Nah, Mary on a Cross is a satanic song that's basically mocking Mary. Yeah. It's basically saying like, I don't know. We can go look at the lyrics here in a minute, but it's basically I think it's basically saying to put Mary on a cross. Like, it's pretty satanic. I'm pretty sure. Yeah, we can sure squeeze in some Streamer University. We'll stream it in between becoming a senior marketing director and a streamer and a full-time 80-hour week blue collar employee. Yeah, we'll squeeze it in somewhere in between there, I'm sure. We had literally so stretched thin. It's like I get home at 8, dude, and we're like already locked in. I'm like figuring out what the fucking underwriter is and what a service representative and a solicitor. This shit is loud as shit. Holy. Actuaries calculate policy rates, reserves, and dividends, and also make applicable statistical studies and reports. Actuaries are concerned with the cost of insurance as a whole, or the cost of a specific risk. An insurance adjuster is a person who engages in investigative work to obtain information for adjusting, setting, and denying insurance claims. It's all common sense, really. career agency is often a branch of a major stock or mutual insurance company. Managerial system is a form of career agency. Personal producing general agency is a similar system to the career agency. Don't recruit, train, or supervise career agents. Independent agency doesn't commit a sales staff or agency to any one particular insurance company. Okay. Are we independent technically? Yeah, I'm not reading all this shit. I'm not gonna know all these court cases, bro. Do I need to know all these court cases? Like 1968 Paul v. Virginia, 1944, 1958. I'm not remembering this shit. Fair Credit Act, huh? Passes the Fair Credit Reporting Act. The Act's attempt to protect the individual rights to privacy. The law requires fair and accurate reporting of information about consumers, including insurance applications. Insurers must inform applicants about any investigations that are currently being conducted following the completion of the application. If the consumer report is used to deny coverage or charge higher rates, the insurer must provide that applicant with the name of the reporting agent that's conducting the investigation. Okay. Cool. National Association of Insurance Commissioners Act. NAIC. All state insurance regulators are members of the National Association of Insurance Commissioners. Was formed shortly after Supreme Court Paul v. Virginia to encourage uniformity, assist administration, protect the interest of policies, to preserve state regulation. Yeah. National Conference of Insurance Legislators. So it sounds like every fucking court case has its own association that was made after the fact. Interesting. Liquidity indicates a company's ability to make unpredictable payouts to policy owners. Reserves are the accounting measurement of an insurer future obligation to its policyholders. Stock companies. Types of insurance companies. Stock companies are non-participating mutual companies or participating. Assessment mutual insurers pay for claims. Fraternal benefit societies. Yeah, we're on independent agency systems. The rest of this is kind of dumb. Yo, the fact they don't have a 2x button is beyond me. Alright, let's do these questions. There's no question here. It just says 1 of 7. There's not a single question on my screen. It's just a blank screen. I hope that's not a question. At what point must life insurance applicant be informed their rights fall under the Fair Credit Reporting Act? Upon completion of the application, no? Let's give this a shot here. says, at what point must a life insurance applicant be informed of their rights that fall under the Fair Credit Reporting Act? Then it says, at the policy's delivery, before the appointment scheduled, when the insurer receives the MIB report, or upon completion of the application. It's definitely upon completion. Yeah, it is. That just sounds the most right. What year was McCarran and the What year was the McCarran and Ferguson Act? 1945. Bog champion. What was the name of the law that requires insurers to disclose information gathering practice and what was obtained? Is that not the Fair Credit Reporting Act? What is the name of the law that requires... It is? Yeah. That's what I thought. Who elects the governing body of a mutual insurance company? How the fuck? Policyholders, stockholders, chairman of the board, or the bondholders? Policyholders, right? I assume since we're talking about all insurance, it'd be all policy shit. Like it's all people's choice. Or am I capping? Yeah, policyholders. Typical. The governing body of mutual insurance companies is elected by policyholders. Continue. Which of the following requires insurers to disclose when an applicant's consumer or credit is being investigated? Financial Services Act, the McCarran and Ferguson Act, intervention of ASCC, or the Fair Credit Reporting Act? The Fair Credit Reporting Act, right? That's what we're doing? Yeah, it is. Alright. Chapter 1 is done. Bog champion. The nature of insurance. Can I just skip all these? Like, I feel like I pretty much know. Oh, wait, this is actually a lot of fucking vocab here. Holy shit. Well, this is a lot of... They just smacked me with like fucking 50 vocab words on one page. Adverse selection. This is broadly defined as selection against the company or the tendency of the people with higher risk to seek or continue insurance to be a greater extent to those with little or less risk. In other words, adverse selection occurs when the percentage of poor risk among those covered by the insurance policy exceeds the ratio predicted by the actuaries. Hazard. This is any factor, condition, or situation that creates an increased possibility that peril will actually occur. Homogeneous exposure units. If I hit someone in a call with that, you think they'll freak out? Sir, those are homogeneous exposure units. I think be like, yeah, shut the fuck up, dude. Oh, sir, what about the homogeneous exposure units? They are objects of insurance that are exposed to the same groups of loss. Ooh. Indemnify. This is the act of restoring insureds to the financial condition that's prior to loss. Indemnity contract. This is a contract that attempts to return the insured to her original financial position. Law of large numbers. The larger the number of individual risks that are combined into a group, the more certainty there is in predicting the degree of amount of loss. Loss exposure is the risk of possible loss. Moral hazard. Personal reputation. Peril is the immediate specific event that causes loss. Risk, reinsurer. I don't think I think a lot of this is just normal. This chapter is going to break down perils, loss, and hazards, risk pooling, also referred to as loss sharing, distributes risk by spreading the cost of possible losses over a large number of people, transfers risk from an individual group. Okay. The principle of indemnification states that the goal of an action is to restore the insurer to the same financial position prior to the losses. This doesn't affect us, right? Because we don't lose. Oh, Ate shows up. Finally, look who shows up. She shows up more than Spicy does nowadays. It's kind of insane. All right. Law of large numbers states that based on experience, larger groups provide an increased degree of accuracy in loss predictions. The greater the number of homogeneous loss exposures. That is such a fun thing to say. I heard through the grapevine. What did you hear through the grapevine? They literally don't communicate like normal people. They communicate via Twitch chat, and I have to figure out what they say to other people who come into my chat because I have no clue what they say. Like, they could have said something completely off the wall. I have no clue. You have to give me the rundown. Insurers must minimize adverse selection, which is defined by the tendency for a higher than average risk to seek out insurance. Oh, yeah, they are back together. Yeah. Yeah, that's not anything crazy. Who's saying that? Who's saying what? That the law of large numbers is based on experience? Larger groups provide an increased degree of accuracy in loss predictions. Yeah. Peril. A peril is the immediate specific event that causes a loss. As noted in the following list, different lines of insurance cover different perils. Hope all is well. Well, he doesn't live with me anymore. He lives with her, so it doesn't matter to me. He do his own thing. Typically, insurance policies defined the perils being protected against one of two ways. Named perils and open perils. Oh, specified perils and special perils. Almost like pearls. Interesting. No more pool streams? I'll stream by myself. Dallas scored. What do you mean Dallas scored? Is there some basketball game on right now? I'll still play pool by myself. I like playing pool. I can play pool by myself. I'm pretty good at pool. Oh, I actually got much better. Dude, homogeneous, can you guys tell me what do you think of homogeneous exposure units? They're kind of like similar objects of insurance that are exposed to the same group of perils. Like a large number of homogeneous units, the easier it becomes to predict loss. A loss exposure can consist of loss exposure units. That just is what it is. No one knows what the fuck I'm going to be saying. I can't use these words in actual conversation. Speculative risk is a risk that presents both loss and gain. Pure risk represents a present for potential loss, no possibility of gain. Handstand stream. After I graduated, my brain got laggy. Yeah, dude, I'm not, at no point am I going to be sitting in front of someone and go, "Oh, sir, but you're not taking into account the homogeneous exposure units." Like, at no point will those words come out of my mouth. Sir, the homogeneous exposure units, you're just not taking them into account. After I graduated, my brain got laggy. I didn't even graduate. My brain still got laggy. Your brain. Risk transfer features a legal contract that transfers risk from one party to another. Risk retention is a conscious strategy which a person maintains a certain amount of reserve to address unexpected expenses. Not watching a summary video. Blow me. Alright. I feel like this is all common sense though. I mean, yeah, there's some stuff in here that's like homogeneous exposure unit. It's like, who the fuck cares? But most of the stuff that's like, they're like trying to like like force feed you is pretty like speculative risk and all this other bullshit, risk transfers and stuff. It all works like you would think it would work so far. For insurance purposes, similar objects which are exposed to the same group of perils are referred to as homogeneous exposure units. We all know this, chat. Most you can break down via the construction of the word. Yeah, and the questions they ask are kind of like leading. A business becoming incorporated is an example of a risk. A business becoming incorporated is an example of a risk being... It's not reduction, right? It's being transferred. It's not retention or... It's not definitely not severance. That just doesn't make any fucking sense. How's life been? Life is good. Which of these statements is not a characteristic of a law of large numbers? Losses can be predicted in large groups with higher degree of accuracy. Individual losses can be predicted based on that past experience. Group losses can be predicted based on past experience, or rates can be calculated to compensate for loss. Individual, right? Because individual would be a singular person, not a large number. It wouldn't be group losses or average rates, right? Because it's individual. Yeah, that's correct. Purchasing insurance is an example of a risk. Would that be true? Well, it depends on what kind of insurance you would do. Oh, it's asking me what it is. Oh, it's either risk retention, risk avoidance, risk transfer, or risk sharing. What would it be? Not gonna lie, I love your friend Sammy. She's one of the nicest persons I ever met. Well, I'm glad she's nice to you. I'm glad she's nice to you. That's good. Transfer? Why would it be transfer? Why would buying insurance be? Well, I guess it'll tell me if I get it wrong, huh? Yeah, purchasing. Okay, it doesn't. It just says purchasing insurance is an example of a risk transfer. Thank you. Thank you. Okay, purchasing insurance is an example of a risk transfer. When you buy insurance, you're transferring the financial risk of a potential loss to the insurance company in exchange for paying a premium. So that's how they can guarantee you no loss, because you pay a premium for your deal. I see. I understand. I see. Not bad. Understood. Now I see why it's a transfer. That makes sense. The law of large numbers enables an insurer to predict losses. Is that not what it's for? Leveling smart. Yeah, he's pretty smart. He is pretty intelligente. The law of large numbers, that's predict losses. Yeah. Which of the following types of risk is insurable? Operational, physical, speculative, or pure? Pure risk are most insurable. That is correct. How can an insurance company maximize its exposure to loss? Risk concealing, reinsuring risk. That doesn't make any fucking sense. Reissuance or risk assumption? I got no fucking clue. It wouldn't be reissuance, right? It's reissuance? Nah, it's incorrect. It's reassuring risk. Reinsuring risk. So to minimize loss, they just reinsure the risk? Wouldn't that just guarantee more loss? Which of the following describes the act of insuring risk against a possible loss? That's Okay, so reinsuring risk to shield from a possible loss is risk transfer. Insuring a risk against possible loss is an example of risk transfer. Interesting. A hold harmless clause, an example of a hold harmless clause. Everything is just risk transfer. Is all of I'm beginning to see, is all of life insurance just like risk transfer? Literally every answer. Well, guys, I gotta get up in 6 hours. I hope you have a good one. Yeah. Later, Ate. This is a boring stream. I know we just studying out here. The predictability of losses will improve according to the law of large numbers. How would the losses be affected? Congratulations, you passed with a 90. Nice. Bog champion. Legal concepts of insurance. How many chapters are there? There's 19. We could really just fly through these. Clock. Competent parties' legal purposes offer an acceptance and consideration. Clock. That fucking noise. All right. Insurance policies are considered aleatory contracts because the payment obligations of the parties are contingent on the future, an uncertain event. I see. Part of a life insurance policy guarantee to be true is called a warranty, a representation, an exclusion, or a representation, or a waiver. Warranty, representation, exclusion, or a waiver. Warranty, right? Probably. Yeah, that's right. Which of these is not a type of agent authority? Implied, principal, apparent, or express? Principal? Yeah. Which of these is not considered to be an element of an insurance contract? Acceptance, consideration, negotiating, or the offer? Negotiating. Which of these requires an offer? Wait, which of these requires an offer, acceptance, and consideration? That would be a contract, right? What basically what it just asked. The rest of these don't make sense. Well, I don't even know what the fucking estoppel is. I don't know what the fuck that is. A policy of adhesion can be modified by whom? The insurance company? The agent, the primary beneficiary, the insurance company, or the applicant? The insurance company. STOLI has been found in violation of which of the following contractual elements? Stranger originated life insurance. What? Stranger originated life insurance has been found to be in violation of which of the following contractual elements? Consideration, legal purposes, offer and acceptance, insurable interest. Consideration clause of an insurance contract includes Did John just make me pay for this shit? Like, did John just scam me into paying for this shit with his code so that he'd get like a commission? Or could I have just gone on like Quizlet and found all this information? That's basically what I'm doing. Oh, I used your code. Interesting. But the legacy 24 whatever, that was your code? Like when I was in Excel? When must insurable? What I'm asking is like, are these trainings just like bullshit, or do I actually have to like? Am I completing these trainings because the state of Texas says I have to go on Excel training course to do it? When most insurable interests exist for life insurance contract to be valid. Huh? When must insurable? Oh, so the state of Texas says I have to take the course. I see. That makes more sense. In regards to the representation or warranties, which of the statements is true? Representations are statements. In regards to representations or warranties, which of the statements is true? If material to the risk, it's a false representation will void policy. Warranties or statements are statements considered to be true to the best of the applicant's belief. Representations are statements guaranteed to be true in every aspect and respect. If the material to the risk, false representations will not void the policy. If material to the risk, false representations will not void a policy. Is that typed out correctly? Oh, it doesn't matter, I passed. I got that one wrong. It was worded like shit. I don't know what the fuck they want me to do. Worded by an idiot. Alright. Insurance companies would love to just hand you a pack and tell you to go take the test. Fuck it, dude. Might as well. That's basically what I'm doing. I'm just speed running through all these chapters. And then I'll just take the Quizlet like fucking 8 million times until I'm at. I'll go on Quizlet, find a practice test, just keep doing it over and over until I make a 90, and then I'll fucking take the stupid 200 question test, and that'll be that. It's got to be proctored too. What does that even mean? All the insurance products require an agent to have a proper FIN or FINRA securities registration to sell them, except for all the insurance products require an agent to have a FINRA securities registration in order to sell them, except for a variable annuity, universal variable life, modified whole life, or variable life. Variable life, right? That's what we sell? No, modified whole life. Interesting. Which type of policy is considered to be overfunded by the IRS guidelines? Someone will monitor you taking the test? Yeah, that's fine. A life insurance policy is an overcrowded... A life insurance policy is considered overfunded by the IRS. What kind of life insurance policy? Okay. I'm just gonna do the one that doesn't have life in the name. That's correct. A modified endowment contract. Policy that is overfunded to where it does not meet the 7-pay test is considered a modified endowment contract. I see. Stranger-owned life insurance is when a person purchases life insurance only to sell what? Only to sell sole proprietor interest, insurable interest. Stranger-owned life insurance is when a person purchases life insurance to only sell to a third party with no insurable interest, a sole proprietor with insurable interest, an underwriter, or a relative with insurable interest. Selling it to a third party, right, with no insurable interest? Yeah. Which of the following policies is characterized by a flexible premium and a death benefit that allows the policy owner to control the investment aspect of the plan? Variable life? Or no? Is it variable life or variable universal life? There's two of those here. It's universal. Yeah. How does a typical variable life policy investment account grow? Based on returns from the insurer's general account? Tied to the price of gold through mutual funds, stocks, and bonds? No, it's through based on the insurer's general account, right? Or is it through... No, because we copy the S&P 500, so it would be copying stocks and stocks. It'd be a separate account. That doesn't give you that option, pal. Yeah, it's through mutual fund, stocks, and bonds. But wait. Which of the following life insurance policies combine term insurance with an investment element? Universal life, decreasing term life, increasing term life, or graded life? Variable? No shot, right? There's no variable. It just says universe. Yeah, universal. Cash value in blank life policy may fluctuate to reflect changing assumptions regarding mortality cost, interest, and expense factors. And universal endowment graded. Is it universal again? It is. A universal life policy has a cash value that may fluctuate to reflect changing assumptions regarding mortality cost, interest, and expense factors. Combination of whole life and blank term insurance is often referred to as a family income policy. Decreasing level, variable, universal, decreasing. A family income policy is a combination of whole life and decreasing term insurance. Life insurance immediately creates an estate upon the death of an insured. Which of the following policies is characterized by a guaranteed minimum death benefit? That would be whole life. But I don't have whole life as an option. Gives me modified endowment contract, universal, a fixed annuity, or variable life. Be universal, right? Or would it be variable, considering I don't have an option? Universal again? No, it was variable. The variable nature of a variable whole life insurance is a death benefit. However, if investment performance is poor, the death benefit will not go lower than the policy's guaranteed minimum. A 15-year mortgage is best protected by what life policy? 15-year level term, 15-year decreasing term, adjustable life, or a modified whole life? Yeah, decreasing term. A limited pay life policy has whole life insurance, no cash value, premium payments limited to a specific number of years, premium payments that are paid up to 100, or graded death benefits. Year 4, that doesn't help me at all. Under a graded premium policy, the premiums start low and gradually increase over time, are constant throughout the length of the policy, can be adjusted are higher during the policy's early years or are lower? Yeah, lower than higher. Credit life insurance is what? Credit life insurance is a type of insurance policy that is designed to pay off a specific loan. But this one says credit life insurance is issued in any amount of discretion of the applicant, issued in an amount not to exceed the amount of the loan, coverage that waives the premiums of a loan payment in the event of total disability, or used in the event of loss of income. Not to exceed a loan. That's it. You got it. Which of the following of these life products is not considered interest sensitive? Modified whole life, variable life, interest sensitive whole life, or variable universal life? Universal, right? Or is it modified whole life? Modified whole. Jay is issued a life insurance policy with a death benefit of $100,000. She pays $600 per year in the premium for the first 5 years. The premium then increases to $900 per year in the 6th year and remains that level thereafter. The policy death benefit also remains $100,000. Which type of insurance policy is this? Modified premium. Is it graded or is it modified premium? It's modified premium. Was not graded. What type of life policy covers 2 people and pays upon the death of the last insured? Was that joint life insurance? So would you want joint life insurance on your wife? Or would you want 2 separate plans? It's a survivorship. I guess you'd want, yeah, ideally 2 separate plans because you wouldn't want to die and then your wife just be fucked or you would be fucked. No, but like even as a person though, like if you or your wife died, you wouldn't get any of the money and just be kind of just still in there until you died, and then you'd have to give it to your kids or something like that. What type of policy would offer a 40-year-old the quickest accumulation of cash value? 20 paid to life, paid up to 65, 30 paid to life, or straight whole life? 20 pay life policy. Kay is looking to purchase renewable term insurance. Which of these types of term insurance may be renewable? Increasing, adjustable, decreasing, or level? Level. The correct answer is level. A level term policy pays the same benefit amount if the death occurs at any point during the term. Level term policies may be renewable. Interesting. A blank life policy combines investment choices with the form of term coverage. Is that variable universal? Well, a life insurance policy that provides a policy owner with cash value along the level face is called whole life, credit life, level term, or ordinary life. Whole life. I passed with an 80. Alright, I got 4 chapters done, bruh. How long have I been live? For 50 minutes. 4 chapters in 50 minutes ain't bad. How many chapters are there? 19. I'll be done with the shit by tomorrow if I can get off before 7 o'clock. So. For a day and you'll be done by Sunday. I feel like I'm learning more just skipping through it than I did reading the first fucking 2. Anyways. Alright, bro.